Hey everyone, welcome back to Corporate Decoder. Today we're diving into Hapi Metaverse's latest 10K filing. It's a long read, but don't worry, we'll decode what really matters. Let's just say some of the numbers in this report are about as exciting as watching paint dry, but we will keep you hooked. This report shows the company's performance over the last year and gives us some insights into what they are doing and where they might be heading. A quick overview, Hapi Metaverse is trying to make its mark in the digital world, focusing on e-commerce, community platforms, and some old-fashioned food and beverage businesses. The numbers paint a picture of a company facing challenges, but with some glimmers of hope. So let's break down the key parts. First off, Hapi Metaverse is officially registered with the SEC. They filed this report called a 10K, which is like an annual checkup for publicly traded companies. It tells investors how the company did financially and what risks they face. This report covers the year that ended December 31, 2024. It's important to pay attention to the date so we know exactly what period we're looking at. The report is from Hapi Metaverse Inc., a company officially registered in Delaware. They have an IRS number and their main office is in Bethesda, Maryland. This is an annual report, meaning it gives a full year's overview. If it were a 10Q, it would be a quarterly report covering just 3 months. As of April 4, 2025, Hapi Metaverse had 507,610,326 shares of common stock floating around. This number is useful when calculating things like earnings per share, which tells you how much profit each share represents. Here is the usual disclaimer. This report contains forward-looking statements, which are basically educated guesses about the future. These statements come with risks, and actual results could be very different, so don't take everything as gospel. Hapi Metaverse started as a company looking to buy other companies, but shifted into digital technology, such as instant messaging and blockchain. They're focused on helping businesses transform using these technologies. Think of it as providing digital tools and advice to companies that want to upgrade their business model. The company is focused on business to business, or B2B, services in e-commerce and supply chains. That means they aren't really targeting individual consumers, but other companies who in turn enhance what they sell to customers. Hapi Metaverse has been relying on its largest stockholder for funds, but they know they can't depend on that forever. They're actively trying to get money from other sources through the sales of stocks or loans, but there is no certainty that they can secure this money or that it would come on favorable terms. The company changed its name from Gigworld Inc. to Hapi Metaverse Inc. This reflects a strategy to get into the metaverse business, offering Metaverse as a Service or MaaS. Think of it as a way for other businesses to easily plug into the metaverse without building everything from scratch. Hapi Metaverse is a holding company, meaning it owns other companies that actually do the work. Those companies are mainly based in Hong Kong and China. This structure has its own risks because these countries have specific regulations that can affect how the company operates and moves money around. New rules in China require companies seeking to list on foreign stock exchanges to register with the Chinese government. There are other stipulations about companies who hold a lot of user data. If they violate these measures, Chinese regulatory authorities could fine them and investors could be exposed to the downside. For now, at least, Hapi Metaverse thinks that these rules don't really apply to them because their operations are relatively small and don't handle a huge amount of private information. In the past year, Hapi Metaverse enhanced its software to work better with direct-to-consumer sales. They partnered with other companies to help retail businesses use things like AI customer service. The company says its strength is in serving customers and being able to handle projects well. They're also working on new technologies like blockchain, the metaverse, and artificial intelligence. Here's a snapshot of the financial side. Now we're getting to the interesting part. Let's check out the financial highlights. Cash decreased quite a bit from about $745,000 to $428,000. Working capital, which is the money they have to work with, is deeply negative. About $7 million the previous year. That's not a great trend. Total revenue increased slightly with the food and beverage business making up the majority. Service revenues, in contrast, dropped from $28,000 to $0, whereas travel business also dropped. There was a big jump in operating expenses, mostly because of increased labor costs in the food and beverage business. And of course, we can't forget the massive loss of $4 million this year, though it is lower than the $6.9 million from the year before. That said, they are still losing millions. The company saw negative cash flows this year from 816,000 negative to 1.3 million negative. That means that the company is burning even more cash this year than last year to operate. They are spending money to keep the doors open. Here's a key thing to note. Management has found weaknesses in their internal controls for financial reporting. That is, their accounting might not be perfect. There is a risk that the financial reports are inaccurate or incomplete. This can shake investor confidence. It is worth mentioning that a lot of senior management lives in Hong Kong or Singapore. It could be hard to take legal action against them because their assets are outside the United States. Plus, there is a lot of uncertainty about how Chinese laws might affect Hapi Metaverse, which could result in more scrutiny and affect the value of their stock. The company also adopted an insider trading policy, which is a set of rules to prevent people with inside information from using it to make money trading the company's stock. It shows they're serious about playing by the rules. In terms of cybersecurity, management's team has primary responsibility and supervises efforts to prevent incidents through various means, from internal and external consultants and leading employee training programs. The board receives periodic reports from management on their cybersecurity risks. What does all this mean for Hapi Metaverse? On the positive side, they are actively pursuing the Metaverse as a service idea to stay relevant, and their revenue is increasing due to the acquisitions. However, the company is burning through cash and has been for a while. They need to find ways to become profitable, and the heavy reliance on related party financing, combined with the issues in financial reporting, definitely raise some red flags. Looking at the long run, Hapi Metaverse has potential to transform its e-commerce business, but it desperately needs to improve its financial footing. Thanks for watching Corporate Decoder. If you enjoyed this video, please subscribe and give us a like.